What exactly do we mean when we talk about tax planning? Most accountants list tax planning as one of their services on their business card, their website, and their brochures. But what do they mean? In most cases, they'll sit down with you sometime in November or December, take your year to date profit and loss statement, project it out through December 31st, and transfer the numbers to their tax software. They see how much tax you can expect to owe, then tell you if you should adjust your January estimated payment up or down. If you're looking at a tax bill, they'll suggest buying some equipment or a new vehicle before the end of the year, or maybe to set up a qualified retirement plan. That is a tax projection, not tax planning. My name is Marc Barnes, and I'm the Family Office Director at Copper Canyon Tax and Financial Services, and we've helped clients save millions of dollars in income tax. Let's start by discussing how the tax system works in order to build a foundation for understanding how tax planning works. Most people would look at the tax code and see thousands of pages of gobbledygook, but there really is a certain logic to it that jumps out if you look hard enough. I want you to see the tax code as a series of red lights and green lights. The red lights are where you have to stop and pay tax. The green lights are where you don't. Internal Revenue Code Section 1 says there is hereby imposed a tax determined in accordance with the following table. And that sets out the familiar rates that we all know and love. That's a red light. Stop and pay tax. Section 1401 outlines the self-employment tax rules and rates. That's another red light. Stop and pay the tax. Section 1411 outlines the new net investment income tax rules that came in with the Affordable Care Act. Another red light. Stop and pay the tax. But very quickly, the code runs out of red lights and starts including green lights. These are the places where you can go without paying tax. These are just a few examples. Section 105 makes employer health benefits deductible to employers and tax-free to employees. Section 132 makes certain fringe benefits tax-free. Section 170 makes charitable gifts deductible, at least for those who itemize. And Section 1202 is what makes permanent life insurance such a great tool. Here's the bottom line. Most tax professionals are so busy doing taxes, they focus on the red lights. And that's important because blowing through a red light is what gets you in trouble. But they don't take the time to look for the green lights that can help you pay so much less. Looking for the green lights and implementing strategies to take advantage of those green lights is what separates planning from projection. Finally, consider this. Sometimes you have to stop at a red light, but then you can turn right on that red light. So proactive tax planning also involves finding opportunities to turn right where other tax professionals simply stop. Those green lights fall into one or more of four buckets. Timing. Timing-based strategies are things like using your 401ks to shift tax bill until you withdraw those funds from the account in the future. Shifting-based strategies like hiring your children to work for your business and shift that income from your higher bracket to their lower bracket. Code-based strategies like Section 105B that may let you deduct your family's medical bills as a business expense. And product-based strategies like separate managed accounts, insurance, and annuities. Now that we know what our goal is, to find and exploit the tax code's green lights, let's take a look at the process. It works a lot like going to the doctor. If you're sick, you visit the doctor, and typically three things happen. First, the doctor examines you and diagnoses the problem. Does your stomach hurt? Maybe it's food poisoning. Maybe it's something more serious like pancreatitis. Maybe it's really bad and it's cancer. Regardless, the doctor has to figure out what the problem is before they can solve it. Next, the doctor prescribes the solution. What is it going to take to fix the problem? And finally, someone has to fill that prescription. That might involve a trip to the pharmacy for medication. It might mean surgery. It might mean physical therapy. But if the problem is serious, it's not going to fix itself. Taxmaster Network style planning follows the same model. The diagnosis takes the form of an assessment. This is where we sit down with you, look over your business and personal tax returns, and look at supporting documents like investment portfolio statements. We'll ask a series of questions about your goals and resources. Then we'll diagnose any mistakes and missed opportunities that might be costing you taxes that you don't have to pay. The prescription takes the form of a tax blueprint that includes the green lights that you're missing out on. And finally, we'll fill the prescription. This is where I step in as the quarterback and lead the team to victory. This is going to include guidance, checklists, forms, templates, and referrals to specialists that you need to put the strategies to work, to document them properly, and to audit proof your tax return. There you have it. Easy to understand analogies for explaining how the tax code works and explaining how the planning process works. You'll find them to be helpful foundations for everything that follows from here. To get started and see if our family office is right for you, scan the QR code or visit tinyurl.com/markfod.